If you happen to catch the video I put out last week, I talked about the housing market frenzy being over, finished, kaput. It's been quite a ride for the past couple of years, but that is quickly coming to an end. And the data from this week continues to support that. So, what should we be looking for going forward for the rest of 2022? So, this week I'm going to do something I don't do very often. I'm going to break out that crystal ball and give you an idea of what I see for the rest of 2022. Hi, this is Andrew with the S2 Real Estate Team here in Frisco, Texas. And if you've seen videos I've done in the past, you'll know one of the things I don't necessarily like to do too much is actually make predictions. And it's not that I'm afraid to share my opinion on what I think the future holds, but it's just the thing is, it can change, right? So you may recall, I mean, as we entered into the COVID era, the majority of the predictions out there were that the market was going to crash. We were going to see something as bad as, if not worse than 2008. And exactly the opposite happened. The market absolutely took off. For the record, I was not one of those that predicted the market was going to crash. I actually said the opposite. I didn't forecast it to take off the way it did, but I certainly didn't forecast a crash. And that's obviously what has happened going forward. But the two things on people's minds right now really has to do with mortgage rates and home prices. And how is that going to play out? What exactly is going to happen? And how is it going to impact potential buyers and sellers in the marketplace today? We've had several buyers over the past couple of weeks basically put things on pause. And you're getting sellers hitting the panic button a little quickly, saying, "Oh my gosh, we're past it. We've missed our opportunity to sell," and that's not the case at all. Most often, when you have events that have taken place like we have over the past couple of months, you see a knee-jerk reaction. The media pounces on that, and there's all kinds of dire predictions given. So again, we're just going to jump into a couple of those today, and I'll share where I think we're going to go going forward. So I'm going to share my screen with you here. So first, let's take a look at mortgage rates. So this is from Mark Fratantoni, who's the chief economist at the MBA, which is the Mortgage Bankers Association. So they know a few things about mortgage rates. And he said they're likely to plateau near current levels, which means you shouldn't see them increase substantially more. He said the financial markets have basically already attempted to price in the impact of the Federal Reserve's actions over the coming cycle, and they are likely also pricing in the economic slowdown as a result. So what exactly does that mean? Well, the Federal Reserve's goal right here is to create a soft landing for the economy. They're going to bump up interest rates in order to try and get a grip on inflation, and or try and make things just slow down. Very difficult to do, and the Fed hasn't always been so successful at that. And most leading economists do think that we'll see some form of a recession. Now, a recession is not a depression. It's a normal part of every economic cycle. Okay, so it just means things are going to slow a little bit. There's already evidence of that happening. But what Mike is saying here is that the mortgage markets have already taken all of this into account in their current pricing. So for where things are going forward, he says, once we are past this rate spike and associated volatility, the Mortgage Bankers Association expects that potential home buyers may be more willing to re-enter the market. Now, we saw that a couple of months ago. As rates spiked, we actually saw a lot of people pull back. But we also saw a lot of people jump in an effort to try and get in ahead of further rate increases. What Mike is saying here is that those that took a step back and paused just to kind of see where things play out, the indications right now is they're likely to start entering the market once again as things start to level out. So let's take a look at where mortgage rates have gone lately. So as you can see here, this is going back to the beginning of the year up until today. So following this, as we all know, rates spiked substantially between December 30th and right here, about the third week of April, April 21st. We saw rates go from just over 3% to over 5%. Since then, yes, they have bumped up a little bit, but this is about what Mike was saying. Rates essentially have plateaued since then, right? And as of last week, they were running at 5.09%. Now, it's mixed on where they go from here. Some people think they're going to bump up a little bit more. Others think they're going to hover right around here. I've seen other experts predict that rates as we go into the first quarter of 2023, may in fact even drop back and hold somewhere in the low fours. And again, there's that crystal ball thing again. No one knows for sure, but the consensus view is that rates should hold somewhere between 4.75 and 5.25. There's others that think it'll go higher, but as of right now, rates are holding fairly steady. Now, with that in mind, what are we looking at in terms of home sales? How is this likely to impact home sales? Now, if you've seen any of the headlines over the past couple of weeks, you'll see report after report after report. Pending home sales are down. Home sales are down. Mortgage applications are down. It's doom and gloom. But what I always like to do is keep things in perspective. So let's take a look at this. This is existing home sales. So it's important to remember that in 2017, 18, and 19, so pre-pandemic, the housing market was really strong. It was going along at a good pace. And we were looking at 5.5 million annual home sales to 5.3 million. Okay. 2020 and 2021 were not normal years, as we all know. The market absolutely took off. And what we saw was 5.6 million sales in 2020. So even with the COVID shutdowns, the pandemic shutdowns, it was still the strongest year than we'd seen in the previous three, right? So it had gone back up. 2021 was ridiculous. I mean, 6.1 million sales overall. Now, as of April 2022, we're still trending at a rate of about 5.6 million homes sold this year, which still puts you on pace with 2020 and ahead of where we were in 2017, 18, and 19. So when the news forecast, the media outlets say home sales are down, yeah, compared to what? Compared to 2021, they are. But compared to where we were before, we're still at extremely healthy levels. Now, to add to this, this was the forecast as of April 2022. The latest forecasts right now are actually showing that home sales could, depending on who you listen to, I mean, Fannie Mae, Freddie Mac, Mortgage Bankers Association, National Association of Realtors, they're now actually forecasting somewhere between 6 and 6.8 million homes sold, which would actually exceed the levels in 2021. And they're saying that because of the fact that the builders are starting to get some more inventory online, and we're also starting to see inventory build across the country in general. So what exactly does that likely mean for you, and where does it look like home prices will go in relation to this? Well, you're going to start hearing a lot more about deceleration. All they're really talking about here is that the home price appreciation that we've experienced over the past 2 years is settling down. Now, for the past 2 years, we've saying it can't continue, and it's not. The number of price reductions starting to appear in the market is increasing. The sellers that were overly optimistic priced their homes too high. Those homes are starting to come down in price. But I can tell you that it still looks as though home prices are going to continue to go up. Now, I know for many of you that are hoping that they suddenly do a big drop, it's just not in the cards. There's no data whatsoever to support that right now. This will play out different across the country depending upon where you live. Some markets may see a little bit of a softening, but certainly nowhere near a crash. And here in North Texas, Frisco in particular, I can tell you we wrote offers for people over the weekend and they were outbid, right? And we still wrote above list price and we still didn't win the house. So, there are still plenty of people, especially in this market, willing to pay over. But the number of offers is starting to decrease. And I'll tell you what, if you're looking for new construction, the number of new construction builders that have reached out to us and said, we've virtually cleared all of our wait lists. We're now going to allow people to pick a lot and build a home and guarantee pricing. We're also going to stop the idea of having to do constant bids on homes. All of that is starting to appear. So what it looks like right now is conditions are going to soften, right? Not crash, but soften, going to make it a little bit easier and more normal for anyone out there looking to buy. And for sellers, it's a great time. I mean, prices are still high. There's now more for you to choose from if you're looking to sell and buy, and there's still plenty of buyers out there. However, you can't just throw a price on anything and expect that someone's going to pay it. That's not the case right now at all. So hopefully that helps. That's a little bit of where I think the market's going to go. So conditions are going to improve overall. Just slow down a little bit, right? Give everyone a chance to just breathe slightly, which was not a bad thing at all. So if you've got additional questions, please don't hesitate to reach out. As always, you can reach us at 469-296-5230, or feel free to email contact@s2realestateteam.com.